Aaron, I thought we could kick it off with the latest stimulus moves that we've seen this week out of China. It seems as if equity investors are really taking this in their stride. We're seeing mainland markets, and as an extension to that, stocks in Hong Kong also getting a boost today and through the course of the week. But ultimately, how critical is this for the outlook for the Chinese economy?
Yeah, well, first, Dan, great to be with you here. I think it is good news, absolutely. But I think the bar for China has been very low. That's why you're seeing the type of reaction out of mainland equities and Hong Kong equities. Most anything associated with China, I think, is getting a boost here. And a lot of that has to do with sentiment that has just been extremely negative. This has been one of the longest downturn in Chinese equity markets we've ever seen. And I think that reflects some extremely low sentiment. So it doesn't take a lot to get people feeling just even a little bit better about China, which is having a big boost to Chinese equities. I do think this is good for the economy. But I think you're seeing that this is a different type of stimulus than we've seen in the past. You're not seeing energy prices go through the roof. You're not seeing metals prices go through the roof. There's been a little bit of support there, but this isn't the turn to a bunch of infrastructure or housing building. In fact, if anything, I think China wants to do the opposite here. The last thing they want is build more homes, but they want to support the housing market. So I think this is a good thing to help sentiment towards China. I think it's probably a stabilizing factor for the economy, but it's not the old type of just push that gas pedal on infrastructure like it used to be. That's the old way China used to apply stimulus. I think this is a bit different.
So, Aaron, how should investors be reading this? Is this an equity rally that you want to be involved in?
I think cautiously so. I mean, some of the things that have made investors nervous about China haven't gone away entirely. I mean, we're still in the midst of a heated U.S. political season, and China comes up as a topic there quite regularly. And so there's a little bit of U.S. political overhang for Chinese equities. Some of the domestic concerns about changing regulatory forces, those haven't gone away either. And so I don't think this is an all clear signal by any means for Chinese equities. But again, sentiment being so dour there, it doesn't take a lot to get Chinese equities off the mat here. So I do think this is a good thing. This could be the start of a more sustained rally, but undoubtedly it's going to come with some fits and starts because this isn't all the issues that have plagued China going away, but certainly to the extent that economic confidence has been a negative for Chinese equities and associated equities to this point, this gives them a bit of a boost that could very well be sustainable.